welcome our viewers here in Nigeria and around the world to this special edition of MPC, the station. The Nigeria Central Bank Governor Godwin Emefiele is expected within the hour to read the communique of the two-day meeting, which is now concluded. Let's get our panelists introduced to you formally for this conversation. Live here at Channel's Global Headquarters, Ayode Jebo, who is the Managing Director and Chief Executive Officer at Afrinvest Securities. Ayode, thank you very much.
Thanks.
We appreciate your time. And live in downtown Lagos, where our studios is at the Nigerian Stock Exchange, Victor Chiazo, who is the head of research at Fidelity Securities Limited, and of course the head of research and strategy at Cultros Capital, Christian Rajakwe. Thank you, gentlemen, for joining us on the program. Let's have this three-part conversation moving forward. Again, let's start from the marketplace, where the Nigerian Stock Exchange studio is. Christian, let's continue this conversation with you. Look at we'll be talking about the markets and the outlook on the rates. We're talking about keeping investors happy, but FX is a main issue here. Folks and manufacturers are calling for a single interest rate, or at least something much lower than 14%, to stimulate the economy. How difficult would this decision be for the MPC?
Sorry, Boston, can you kindly repeat that a bit? I actually missed some lines from the question.
Okay. My question is, we've been trying to keep investors very happy, at least from the debt side, fixed income. But again, we need to stimulate the economy, and the manufacturers, the industries are asking for a single digit, or at least something lower than 14% as headline interest rate. How easy or difficult would this be as a decision for the Monetary Policy Committee?
So if I get you correctly, you're asking how easy will it be for the Monetary Policy Committee to tinker with the interest rates just to stimulate growth?
Very correct.
Okay. I mean, like I said earlier, from last year, the CBN and the DMO was quite emphatic, with their communication to the market that they intended to, work together towards ensuring that the cost of borrowing from the private sector is reduced significantly, by ensuring that government isn't borrowing at the rate they were borrowing last year. And what we've seen so far from the market is, so because of the contraction that we've seen so far for the yields on government, treasury bills and bonds, some fairly established, manufacturing companies have actually come out to the market to raise, commercial papers. I mean, most of those CPs were actually used to refinance some of the bank debts that they were carrying in their books. So we've seen the likes of Nigerian breweries, the likes of flour mill, and the Dangote Cement more recently as well, raising capital through, commercial papers. And we are aware that those CPs were raised at rates that are quite at, some healthy discounts to some of the bank facilities they had in their books. So this so far has been sort of positive, but to what extent does that affect the broader Nigerian, manufacturing sector? We think there's still a long way to go. Some positive steps taken at the last meeting when the, MPC reached a decision through the, through the, policy around the differentiated CRR that allows, banks to tap, some of the deposits they have with central bank to lend to the manufacturing and agri sector at lower interest rates, and also for the CBN to buy, corporate bonds, also just to ensure that, some of these manufacturing companies have the liquidity that they need at, more or less, lower rates. But I think that at where the broader interest rate currently sits at, in our view, is still far away from what the broader manufacturing sector, actually requires, to stimulate, manufacturing process and economic growth.
Okay, thank you. Ayo, let's get you back into the conversation. In terms of where the state of the economy currently is, GDP is sluggish, inflation is coming back. Some folks are predicting at least minimum of another 4 months of inflation on the up north. We're looking at fiscal spending. The administration is struggling to balance the books. Revenue is very sluggish. Expenditure is not waiting. Oil prices is good, but oil production is really not enough. So this is a very delicate road. How much role do you think monetary policy decision, whether to hold, to hike, or to cut, will play in how to help this administration move forward?
Yes, I think it's interesting that beyond just adjusting the MPR from 14%, and there are other policies or other measures that can be used. So you talked in terms of growth, and that's really critical. So there are other policies. For instance, we see the current, at the last MPC meeting, the CBN took a stance to ensure like a modulated CRR for banks to be able to lend at a single-digit rate to some specific sector that are critical to the economy. If you also look at it in terms of on the side of the fiscal authorities, so on their own part, they have to just work on policies that would encourage and build confidence for private investments, which can help handle the issue of infrastructure that can boost investment especially in the small and medium scale enterprises to reduce their cost of doing business. Also, we know that they also need to look at some in terms of coming up with policy that would encourage for most of these to have access to low-cost funds. So when we say low-cost funds, for some of the companies can take advantage of some of the current interest rates. We see that in the last 2 or 3 months, some of the major blue chips took advantage of commercial paper, which at a very low rate. So for some of these companies, if the banks can also carve a niche for themselves, understand what most of these companies in terms of the industry that they want to lend to and understand their cash flow, it will actually also help for them to also support what the government is doing. But the fiscal authority has to come first to open up that space. We saw what happened within the power space. We know they are still reeling from some of the challenges or complexity within that space. But that was a major time when we saw funding by the banks. Policy has to come first before you can see most of these banks also supporting it with lending. So, but you raised an issue regarding how do we also, engender growth at the expense of foreign investors. But when you look at the structure of how Nigerian economy is import dependent, if we don't control even the FX rate, if it goes out of hand, for most of even the manufacturers, the cost of also importing would also be impacted. And as a result, that will also filter into the cost of production, and even the inflation rates that we're also trying, or cost of goods that we're trying to keep within manageable levels, can also go out of hand. So we need policy in terms of growing things internally and see how to reduce the level at which we import as much as possible, such that any major pressure on FX rates will not translate into increased cost of production.
Interesting. I already those views in there. But again, let's take a look at what if we have a surprise. We're expecting the central bank governor to read the communique of the 2-day meeting within the hour, as you heard earlier. So let's get back to our studios at the Stock Exchange. Victor, what if the central bank surprises with a rate hike? What basis points are you looking at, and why do you think they will take such a decision?
Okay, if there's a surprise rate hike by this CBN MPC committee meeting, I would probably forecast a 50 basis point increase, that's a 0.5% increase. And that would just be basically to send a signal to the investors that you can actually keep your funds here to get the best returns in terms of returns on investment compared to other frontier markets and emerging markets. Because the truth is, right now we need to keep foreign investors happy, whether we like it or not. The truth is that we don't have that much foreign direct investment in the shores of Nigeria compared to the likes of foreign portfolio investors, which can actually pack up their bags and leave at any time. Right now, we've seen what's been happening, and that's why we've seen so much pressure on our FX reserve, which has actually lost about approximately $3 billion in the last 3 months. The truth is that we need to stop the depletion on our reserves, hence, because if we continue to see our reserve deplete in that similar manner in the next 4 months, we might actually have a bigger problem on our hands. So for me, if we see a surprise increase in terms of the MPR rates, I'd actually expect it to go increase by 50 basis points, and it's just going to send a signal to the investing public that your investment here will give you the highest return in terms of the frontier markets and the emerging markets. Okay,
Victor, thank you very much. We getting our feed from the Central Bank headquarters in Abuja that the Central Bank governor and members of the MPC, okay, those are live pictures you'll see there right now as we speak. Godwin Emefiele, the governor of the Central Bank, and other members of the Monetary Policy Committee getting ready for their regular media briefing at the end of their 2-day rate-setting meeting. We'll be crossing live to have the briefing by the Central Bank governor, and of course, after that, a few question and answer that should take place within the next few minutes. All is getting set there for this very important. But first, very quickly, let's see if we can get a minute from Christian from our studios at the Nigerian Stock Exchange. If there's a possible or perhaps what we call a surprising rate cut, by what percentage do you think that could happen and why?
Sorry, if there's a surprise rate cut, the implication for the market?
Yes.
Certainly, if there is a surprise, I mean, if a rate cut is definitely going to be very surprising, more so because the environment, I mean, it's entirely favorable to such decisions to be taken. Is it likely to result in...
Christian, we need to cut in very quickly. The governor of the Central Bank has started his reading his communique. We need to take a listen, gentlemen, then we'll come back.